Hi, this is Randy Finney with Right Side of the Chart, and this is a mid-session update for Wednesday, April 17th, 2024. Figured this would be about as good a time as any to get a video out. I was going to screenshot this, get out to you, but we'll figure just do an update and share my thoughts on QQQ and the markets here. So T1 is hit. T1 had a it says 425.02, low of 424.90. You always want to cover above the area you're targeting, and so it remains an area that it's any and all. If you look at the FAQ page, years ago when I started doing this service, the reason I did an FAQ explaining why I list multiple targets, and each one is a level where the odds favor reaction upon the initial tag. So yes, that's it. Odds favor reaction. A reaction I define as one of two things. Either when you're going down, a stock or security and index is falling, then a reaction is either it stops there at that level. That's my hacky sack analogy. If you drop a hacky sack to the ground, it's going to just hit and stick, or you bounce, and that's a tennis ball or a golf ball analogy. So I also shared, what I strive to always do is, what I hate and loathe is hindsight analysis, unless there's a value added. Hey, I missed this. Here's something I missed. Here's why. So I always try to get these levels out and then, kind of trade 5 steps ahead. If the market does this, then they'll do that. And where I'm going in recent videos, for a while, I shared not only did I expect this level to break the trading range, that's, right here, the multi-month trading range in QQQ. But I said that if and when it does, I expect or suspect we could see selling begin to accelerate. Now, I'm going to go over this video. We're at support not just on QQQ, but the most important stock in the world right now, in my opinion, to the markets, and that's NVIDIA. And so, there it is, odds for reaction. But again, I haven't changed my thought process that I think any bounce is likely to be short-lived and or relatively minor in scope. Now, let me just lay out all the scenarios, and you guys and gals decide how you want to trade. 433 to me was a big resistance. I've been harping on it for months now, and it became even bigger the more tags we had. And so support, guys. It was support. Support once broken then becomes resistance. You also have the 50-day moving averages above there and things like that. So any bounce back to that level would be an objective short. As I talked about yesterday, it was a good question put to me, is what happens if we go above there? And again, I addressed that yesterday in yesterday's video, as well as in the comments section to the reply to that question. So you can look at that. However, I don't think that's the most probable outcome, most likely scenario, I should say. I maintain what I said before, that I think once we break that, the reaction will be little, if any. And so it's from a swing and trend trader perspective, and I wear that hat too. I am more apt to sit tight on my positions, because I think any reaction will be minor and fleeting. In other words, I don't think the odds warrant trying to game that bounce like I usually do, quite often do when initial targets are hit. So I think the dam's breaking. This was I always use the analogy, trading range is like a coiled spring building energy. And when the trading range breaks, that energy is released, and the reaction can be pretty powerful. That could and will likely take us down to the next targets. And I still maintain, if you want to keep it simple, sometimes I get so micro in my analysis. I know it can, I get the replies. It confuses some people. Well, what are you, bullish or bearish? You said you just reversed your NQs in your trading account today. You went long, but yet you're talking about the market dropping 10%. Again, that's, I always try to, in recent months, I think I've done a very good job of differentiating what is an active trade and what is a swing or typical trend trade. And if you are a swing or trend trader, if that's what you're here for, and you're not an active trader, you don't have the skill sets, the time, or the inclination to sit there and go in and out and game little 0.5 point, 1% moves in the futures off the intraday charts, then stick to swing trading. And so there's no guarantees any of it plays out, but that's still where I'm still favoring that move down to that, called T4, T5 zone right there. And like I said, this is super micro and so far ahead, 10 steps ahead, since before the market even broke down. I said, I think if and when we get there, it'll probably look something like this. We'll start to, at some point soon, build momentum to the downside. And by the time we get down to T4, again, depending on, if we had a big correction first, counter trend bounce, I should say, a rally or some consolidation to work off the overbought conditions. Maybe that's not the case. But the way I think it'll happen, we'll come down there, probably overcut it intraday or on a intra-week basis, and then park back up on or around the 200-day moving averages. And so hopefully you picked up on it. That's what I was saying today. And again, it's such a micro call. I mean, you listen to analysts on TV and everywhere else, and the best they can do is give you a price target over the next year where stock might hit in the next 12 months and with no precision. So I kind of tend to, work a little more precise. And so I'm looking at NVIDIA, and what I was trying to convey to you today when I got that post out is, first of all, this is, to me, the king right now. Apple has always been a crowd favorite, but just based on current market dynamics and the hype and enthusiasm over AI, and this being the poster child, I think when this one breaks, it'll break the animal spirits of the, kind of that, I'll call it an AI bubble. You call it what you want. We can all debate on that later in hindsight, 5 years from now, look back. Made that comment in there that, AI is real. I watched that. There's a documentary on Nova. It's one of my favorite shows in PBS. It's, science-based, and they had a whole documentary on AI. It's a real thing. But as I said many times over, AI is far from new. Everybody thought it was this new thing when ChatGPT was released, because people, the layman, non-scientific minds kind of, when this thing can talk to me and I can tell it a few prompts and it can write an essay as if a human. And that's what, kind of triggered this whole mania. And then the point is Apple is, and that's the thing I was trying to say in that post today without getting too wordy. If you guys remember, a whole war, AI, funding wars, if you want to call it, a research war, started with when Alphabet learned that Microsoft had a stake in ChatGPT and OpenAI. And so all of a sudden, Alphabet, on Google's parent company, just pulled a 180, pulled products all across the line, pulled funding from elsewhere, and plowed everything. They went all into AI, and then they came out with Bard, their AI model. Nobody liked the name Bard, and then they changed it to Gemini. And their bottom line is, I'm a big user of these, tech products. I've got the whole smart home ecosystem. They keep pushing, Google keeps pushing this stuff. Now, some people might find it useful. To me, we'll see. And at the end of the day, I can tell you they haven't monetized this yet. So it's a lot like a lot of, websites like, Twitter and some others that are, hey, have great following. It's a lot of buzz, but are at the end of the day, are people going to pony up for these, AI models? And at some point, I imagine, but in the near term, that's what I was trying to get at before, is that the one that didn't, of the big three big tech companies that we all know that have been around forever, that's Apple. And look at Apple. Apple's the one that didn't jump on the AI bandwagon. But of course, they're playing catch up now. That back here, they were focused on trying to invent their own, have their own cars, own car line, self-driving cars and all that. And then they pulled the plug on that. And so maybe this is reflective of the fact the market didn't like the fact Apple was behind the curve on AI. And so here's where Apple is. Apple's a stock that peaked in the middle of last year and is still well below those lows after double topping. And where the two that did go all in was first Microsoft and put them at all-time highs, and then Alphabet. Again, say what you want. That's kind of my read. And so therefore, so you can follow my tangential brain, how it fires, is these are you have NVIDIA sitting on the throne is the king of AI, and then these two are bigger companies, and they are more diversified. Obviously, they have more diversified product pipelines, cash flow, all that, but it's the AI hype. And so if they can stick the knife in NVIDIA's back, take it down under those levels, I do believe that then Alphabet, Meta, and Microsoft will follow. And my yellow levels haven't changed. They've been here for a while, 149.46 with a bigger level down here. And same thing, right now I'm not looking for the sky to fall. I'm looking for a pullback to the 200-day moving averages, which many will think the sky's falling, but that's only Microsoft or Alphabet here only has to drop about 12% to get there. And the way I trade too, as you can see here, I have really nice support right here at about 139. And that should come in together. So that would be kind of a target. So instead of 12% from where we're at now, let's just say that 139. So it's the same story. I'm calling everything down about, QQQ and most everything down about 10% to the 200s. And, but I'm always open and flexible. I'm open if that doesn't happen and we do this, I will I promise you, like I said yesterday, I'll get my thoughts out to you. And if we happen to smash on down through there, because other things start breaking, and then may sit tight or jump back in if I do end up covering some shorts when we get down there. So there's Google or Alphabet, whatever you want to call it, Microsoft. Microsoft is back in here. You had this purple trading range right here. It was in. It broke above it. But there's a good example. Don't chase a breakout of one. That's why I repeatedly go over this day after day, say the same things. I watch all of the seven, the Mag 7 or whatever you want to call them. I watch the top sectors of the S&P. I watch the major indexes. So if you get one, in this case Microsoft, breaking above a trading range, because you might say, well, Randy, a minute ago you just said trading ranges are like energy building in a coiled spring. So why wouldn't you take that breakout? Why is that not bullish? Well, because a lot of things. There's huge negative divergence has been building that tells me that breakout's likely to fail. Overbought conditions. And then most importantly, the fact that the rest of the market, QQQ, the indexes didn't follow suit. QQQ remained in the trading range. And so what Microsoft did, I'm just kind of microanalyzing this one, it put in a secondary trading range. You can see there, very clear, well-defined resistance, which was the top of my range before. Once broken, then becomes support, right? It's TA 101. Bounced around that support, and now it fell back in the other range, which means this whole thing is a failed breakout. That's bearish. So now we should come down to the bottom of the range, which is a minimum target, and then that's 397, and then I'll most likely break the range and then come on down back to the 200s and about 364. So that was going to take Microsoft, if hit, down also about 10%. So just it's a number I've been kind of talking on lately. Right now, let's just talk about a 10% correction. If it comes, I don't make a lot of promises in this game of investing and trading because it's hard. You can't make many promises. But one promise I can give you, they're going to most likely be marching the bull brigade out on CNBC and Bloomberg. And foaming at the mouth why you should buy the dip. It's the dip we've been looking for. And they may. And I expect them to buy it. The $1 million question, they're going to be talking like, get in because we're going to new highs. I suspect it's going to be, and again, I'm getting 5 steps ahead of myself. We haven't even broken 397, but I'm just telling you my plan. It'll most likely be a counter trend bounce. And then if we go on after that, if there is some reaction around these 10% or so price targets and 200-day moving averages, then once we take them out, especially after a reaction to clear out the near-term oversold conditions and the spike in bearish sentiment you're going to see and all that, because believe me, they will start marching some bears out that have I've been saying this for a long time, but they're going to march. More bulls will be coming out there telling you to buy, and guys, it may be the time to buy. And again, let me be very clear on that, because I know it might sound like doublespeak. Yeah, if I can make a case, and I think I will be at the time, making a case to cover shorts to go long, am I buying for new highs? Am I buying for a hold that's going to go 6 to 12 months and take the market and Microsoft and others new highs? Or am I buying just to game to sidestep a give back of 5, 8%, 10% on profits, whatever it is, on shorts, and then recycle in a higher level? So okay, we're not even there yet. Again, I have to caution, I don't want to get ahead of myself, but NVIDIA is at that, the big level I've had recently is 840, and I even, sharpened my pencil and gave you the 60-minute chart. It's more of a support range from about 840 down to 820 or so. And like I said, I think when that goes, it'll open the floodgates, and then you'll see Microsoft and Alphabet if not immediately, very soon after follow suit. And guess what, guys? If this market just has a lot more buyers in it, and I am not reading the tea leaves correctly, this is where they should come and buy. There's some folks on the site that a little more quiet recently, but have been just downright almost angry that I could even speak to this market going down, and how I'm crazy that you don't see it's going up. Everybody says it's going up this year. There's no recession. Earnings are great. AI's. And so all I'm getting at, guys, I'm not trying to poke, I swear. All I'm getting at is the same levels that I'm looking to break to open the door for more downside are levels, they're good support levels. And if you're bullish, I've said it before, I've been saying this for weeks and months, how you don't step in here and buy NVIDIA, I don't understand. So if that's your stock, now you may be bullish on the market and maybe not NVIDIA, but NVIDIA has pulled back since that last divergent high about 15%. And it's a great support. It's been holding this support. But the reason I'm not buying it, I'm short and looking to get shorter, for lack of a better word, when that breaks, is because every other trading range that I've showed you here recently has either outright failed, like QQQ was broken down, or had, like Microsoft, broke up and then had a failed breakout. And so it makes sense because this has been the crowd favorite, so it's going to be the last to go, I think. I don't know where they went. I could have sworn I had some little micro levels in here earlier on that chart I gave you. I'm going to add them back there, and there's one. And there's another about right there. These are little minor support levels. Like I said, I could have sworn they were on that other chart. I'm just going to color them down a little. See, that just means they're not as significant. Sometimes I'll kind of color code my support and resistance levels. But all right, enough on that. I didn't want to spend too much time, but again, I dedicated a whole post to it just because I think it'll be the straw, the final straw. Or the thing that finally does the trick, I call it. And we've already seen, as I said, and I made this clear today. All top four, even the top 5 sectors of the S&P 500 have all taken out my levels. That was 204. Oh gosh, why did I keep grabbing let me get rid of that silly squiggly tool and make that a circle tool. So I quit grabbing it. Okay, so you have the 204.21, check. Broke down Monday. That's tech sector, by far the most important sector in the S&P 500, and double that even in the 25% of the S&P 500, roughly a quarter, and over half of the Nasdaq 100. So boom, that's it. So just that one sector is really all you need to break to make a case to short the market, to be short, and that they give us that on Monday, and then you don't have to squint to see it now. It's clearly because we followed through. So it's a sell signal, call it what you want, but that's a all day long sell signal. And that's what I usually mean by, solid, impulsive, solid daily close. That increases the odds. So you could have waited and then shorted, when you saw we were going to close well below there on Monday. The market or just tech or any of the tech stocks that you're looking at. Healthcare is number 2. That one long since gave up the ghost. Just textbook breakdowns. Again, these were the levels all in advance, covered 144.55. We broke it clearly. We gapped down below it on April 2nd. And this is just how beautiful the charts can work at times. You got that was the level. Haven't touched it. Failed. Tried to get up intraday. Rejected. Closed down below it. Tried again. Hard rejection. So this is really, if you miss that short entry, most people, I love gaps. I love when I'm bullish and something gaps up above resistance because it traps the shorts in and it denies the longs an objective entry, and then they end up chasing on later. And when you gap down like this, you gap down from here to below that support level, and it didn't give the longs a chance to get out. They're probably saying, I'm gonna just get back to where I was, and boom, boom, rejected. That candle said that was it. After 3 days of backtesting 144.55, when it became clear the bulls could not regain that level, bears were control, they just gave up. Stop started to get hit, and then boom, nothing but mostly red sticks since then. And you don't have to squint to see that one, is clearly. And again, that's the second largest sector of the S&P 500. Financials broke down, as I mentioned, breakdown 1, backtest, breakdown 2, impulsive candle, nothing but red sticks. And then as predicted, JP Morgan, the biggest, I said that's the NVIDIA, I called it, whereas what NVIDIA is to the semiconductors or tech sector or even the stock market, JP Morgan is to the financials. And so I predicted based on the posture of the charts that where it would go after earnings, and that's what's happened, and you don't have to squint to see it. And so again, why am I talking about JP Morgan? Financials are the third largest sector in the S&P 500, but every bit as important in a way as tech. This is the banks. These are the financials. If they've got problems, the whole world has problems, especially the big banks. A lot easier to stem up and shore up the regional banks than it is the if the big banks have problems. And right now it's nothing more than just a correction. But I'm just trying to reiterate all these sell signals, all these check boxes. Oh, and 4050 was my line in the sand, kind of all in moment there. So that's the third largest sector in the S&P. The fourth largest is XLY. Took out the trading range there. It was 177.52. It's already back to the 200-day moving averages. XLI, industrials, and I don't need to keep going because they don't really move the needle. Everything's on breakdown mode. Everything but this little bugger here in the video. So we'll see if the bulls step in and buy it up here. And if they do, then it has the potential, because again, this is just kind of leading the market, leading this bull run, this AI theme. And if they can't take this one down, then it's possible to see the other sectors that have broken down, possibly recover, especially if NVIDIA goes on to new highs. So I don't think that's the most likely case, but we'll watch for it. Okay, so where to make money? Well, a couple things. I told you recently that you can, if you want to, let's say you are short. Let's say you share my mindset, but you're conservative. You want to protect. I said, crude was at resistance here and here and here. I kept repeating that. That's resistance to the top of my orange zone. You could have shorted crude and it's come down, so you would have made, to offset. Well, you actually see. Remember, I don't like direct hedges, which means if I have short QQQ, I'm not going to buy calls on QQQ. I'm just blowing cash, or I'm not going to buy a long on QQQ. It's a washout trade. It's a one-to-one hedge. I'll just close the position if I don't have enough confidence to be in it. So I like these indirect hedges where if I'm right, I make money on both of them. But also if I'm kind of right on my analysis, like I said, if by shorting crude, if it would have gone up into the red zone, you would have been losing on that short, but it would have killed the market even harder. And so your index shorts would have been rocking even better. So that's what an indirect. And likewise, in this case, we actually both played out. Now it's at support. It's at the bottom of my iron zone. So you may look to cover that if you did take that head. Oh, and that uptrend line. I think I gave you this 60-minute target right here. This purple support and the nice uptrend line. So there it is. Now it's coming off this is still a bearish chart. There may be more downside. It all depends if Israel and Iran are going to hold hands and sing Kumbaya. We'll see. I don't really, that's not my forte. But we'll see what happens there. All I can tell you, we're at support on crude oil. So, you made a nice whatever if you did, 5% or so short. And then yesterday I mentioned TLT. Finally, I've been highlighting it as a potential thing, but I finally took a position, as I told you yesterday. And it's going up more for a flight to safety bid. But I made the case based on support. We hit the bottom of my second target zone from the short back here. So you're at support, you have positive divergences, and it's also an indirect hedge. Why? Because if you're long treasuries and treasuries continue to fall, it means rates are going up, and your index shorts should do very well because they are not going to tolerate any higher rates at this point. They already haven't been. My thing was right. They tried to shrug it off for a while, and then they finally took note. That was the whole yellow zone, orange zone thing. So if we get in the red zone where the stock market will really take note, your index short should rock and do much better than TLT's falling. So I see limited downside. And likewise, as an indirect hedge, you can make money on both ways. Like today, you're up 1%. That's a pretty good move in treasuries. Yet the NASDAQ's down 1% right now. So you're making money on both of them because this is a flight to safety bid, and in conjunction with a technical. I won't just normally I won't randomly go into treasuries betting on a flight to safety bid if I can't make a case to do so on the chart. So that's that. And like I said, it's probably some more upside. I'll give you the CB, let me give you a CB chart real quick. Yeah, this is. I think I shared this with you yesterday. There's a downtrend line. Any or all of these levels are potential targets. There was that bullish falling wedge breakout, and so this is ZB. There's some resistance here. Anyways, so again, either a pure play or a potential head max target. We'll just see. I'll just have to take this one day by day, and at some point, sometimes I'll just strip out or remove those hedges. And that's probably maybe when the if Nvidia finally breaks the levels I've been looking at, and maybe I'll just take profits on TLT and or hold on to it. Depends how much capital I want to deploy elsewhere. VIX holding up. Not much else to add. We've had a little bit of consolidation in the markets. Again, once Nvidia, if and when Nvidia breaks this thing, the market, the VIX should let loose, and spike on up, especially if we get, at this point in time, guys. As I'm doing the video, it's, remember we just hit T1 on my QQQ swing trade right here. And bounce. That's the reaction. So the VIX is going to probably take a little breather. Market is a little bounce. Again, I already addressed that in the beginning of the video. How much? I don't know. Like I said, it'd be nice to see it all the way back up to there. If I go to a 15-minute chart, there's my purple trading range right here. Oh, here's what I want to show you. And there's that 425.38 support got hit. That was that bear flag. Remember yesterday I highlighted that bear flag for you. Look. So this was the flag right here. This is your impulsive move down from here to here. You dropped impulsively. And this was the measured target I gave you yesterday. But remember, we hadn't broken down yet from the bear flag. So I move it now and look at that. I remember on the video I told you that, the measured target came in a little below 421.62, which is a support / target I had on the 60-minute time frame, but that I would have covered on a 421.62, even though the measured target was a little more. But in this, again, it never fails to amaze me how often these patterns line up like this. So if it plays out, they're buying it off support because we hit the daily support. That could foil the flag and truncate that move down the measured target. If not, if we turn around soon, probably by the time I get this video out to you and or you're watching it, and we roll back down, that's going to be, that would be the full measured target. I think you can see it here. I put the line and I'm adding the same line, which again was I did it in yesterday's video, measured from here down to there, lowest point of the flag. There was your flag, and I just added it to the highest part of the flag. So if you're active trading, that would be a measured target as well as a decent support. 421.62. Let me see, where is that on my daily? Yeah, it's in between. See that? It's in between. It's just below T1 a little bit and before T2. But let's just, again, you decide what to do if you're swing trading, whether you want to sit tight. And again, if you're bullish, looking for new highs, bulls would love nothing better to see this ramp back up into the trading range, because if we get that far up, and like I told you, if we take out the downtrend line, there's a downtrend line in there as well, probably going to give us new highs. So we take it day by day, and that's all we can do. And times like this, when you hit the first target on QQQ, if you don't want to close out your QQQ position because you're holding out for the prize, bigger, deeper targets, then you can maybe take that hedge I talked about on TLT. Crude, not now because you're at trendline support, but TLT I think still has probably a little more upside in the coming days here. And finally, a quick update on SOX. T1 just hit right there, 209.03. Remember, I always say cover slightly above the actual support level you're targeting. So that one was really off this bearish engulfing candle, which is a topping stick. Never got violated, the top of the candle, that is. And so, from the top so far, semis have now dropped 12.5%. And like I said, more downside targets to come. Somebody brought up Taiwan semi. I think TSM's reporting. And they brought up a Netflix as well. There were two questions that I just responded to. Somebody says, hey, do you think Netflix earnings has the potential to foil the breakdown? My answer is no. I may be right or wrong, but no. Number one, here's what I said. Number one, it's not really a tech stock. It used to be considered that because streaming, before streaming was even a big thing. But they're a media company, and more importantly, they don't have the impact on the market they did when they were the N in the word FANG. They long since kind of lost their weighting. It's their market cap and all that. It's only, when I say only, a $265 billion company. Remember, you have Apple, Nvidia, and all those have recently hit the $3 trillion club. So it all has to do with cap weighting. So there's my answers to you. Even Netflix can do what it wants after earnings. I wouldn't go long or short, but I also, the second part of my answer is just like JP Morgan and so quite a few, I do it every earnings season. I highlight stocks, and if the charts are clearly bullish or bearish, that's the way I predict they'll go after earnings. Not necessarily the initial reaction, this thing could pop but then get sold into, or it could just drop. But based on that, you have an uptrend line right here, which just broke, so we already have a sell signal. There's your uptrend line, gives you negative divergence right there. Divergence has been building really since back this point. You got to go to the weekly chart just to see it clear. So this on the weekly is a big old bearish rising wedge. As I go to wrap this video up, let's not forget, guys, when I throw up the histogram, as I've been talking about, because everything in this video was daily charts, 60-minute charts, 15-minute charts up until now. But remember, a few weeks ago I told you I got one of a pretty reliable trend change indicator on QQQ with a bearish PPO crossover. We're on week 3, so it's certainly not a whipsaw at this point. We're starting to build momentum to the downside, and as I mentioned to you, I think it was last week, or was it earlier? Yeah, it was the beginning of this week. We finally had the broad market, S&P 500, had crossed red. Even though we were green that day, I made a point to show you, look, the S&P on Monday was trading green. Why is the PPO red? Why is it crossed over? Because momentum has stalled. So we had two things happen. We had this, and today's Wednesday. Sure, they'd have to have a super mega explosive rally to flip that back and keep the histogram green by Friday's close. It's not going to happen. So we're going to have a confirming trend change indicator on the broad market now, not just the tech-heavy NASDAQ. NASDAQ leads first. It's going to get, rallies. It's the strongest when the market's going up, but like I've been saying, the leaders have been dying one by one. Apple, Tesla, long since dead. And now we just need the last of the holdouts to go, namely NVIDIA. But I just want to point that out, that's there, the S&P 500. You can look at the Dow. That Dow already triggered the bearish PPO crossover and trend change recently. Small caps already did it last week. IWM, the mid caps, MDY. That's it. Every index is flipped on the weekly. Can they prove to be whipsaws? Sure, I've seen it before, but I play odds, probabilities, not certainties. That's what I speak in, and you can just see. You can go back and look, especially when you have a big green hill, a big green trend like this one. What happens when the trend changes? So you got it there, and yeah, the market didn't crater, but you did go down. That was a 10% probably drop there. You went sideways for months. You went fractionally, marginally higher. That's what the marginal, ever so slightly, even a little whipsaw there. But then it went red again. So if you're just long why this is green, short why it's red, even that alone, you're probably outperforming the market. And so that's it. That's an early trend change indicator. And so to summarize this video, I've had more and more check marks. Just about everyone just waiting for NVIDIA to break now, and the last, and Apple and Microsoft to follow suit. And then, like I told you, I was already pretty much all in even before we broke down, just because I had enough evidence. I always talk about that, kind of the court of law, the prosecutor in a criminal defense trial, has to, propose, show enough evidence to prove that the defendant is guilty beyond a reasonable shadow of a doubt. They don't have to show definitively. They don't have to come in with a tape, a video recorder, and have the defendant stand up on the stand and give a confession. No, you just have to have enough evidence that it's overwhelming. That's what we had a few days ago. And so the boxes keep checking off. And again, I don't want to sound too excited about it, because I've seen boom, boom, boom. I've seen great buy signals, great sell signals, and they just get undone. And if they do, that's the thing, react to it. Don't get married to it. I'm sticking right now. I'm still in that short the rips, cover the dips mode. If and when that changes, I'll let you know. So as of now, if you missed this move so far, since we shorted the day after the Fed, and that's good for on QQQ. It's nothing big, but remember, there's a lot of individual sectors and stocks that we're doing much better. 3, 4, 5 times this, but that's only a 5% drop, and so still plenty to go. And so at this point, if you missed it, I'll leave it at this. You don't short when I started this video. That's the opposite of what you do. There are two plays when a stock falls to support. If you're bullish, you buy that support expecting a bounce, and you can put a stop below it in case it doesn't hold. And if you're bearish, you wait for that support to break. So the only trade as of right now, my voice is if you're bullish, go long. Or even if you want to just game a quick bounce, you can go long, stop below. And if you are one of those folks that just believe this market's going a lot higher, and Kramer and the rest of the brains on television are correct, because that is the vast majority. Guys, the headlines today and yesterday, I've seen the odds, the latest surveys that just come out, the odds for no landing, meaning absolutely no recession, not even a soft landing, have spiked up again. So the sentiment out there, the expectations is that the market's going to do this. So please know that I'm sure I'm not the only one that thinks we're going to go lower, but I'm in a very, very, very small and dwindling camp. So if you are on the other side of that trade, take my analysis. And as somebody said the other day, I think it was Becky, do the opposite. When I said short the trend line, the rally into the trend line was objective, do the opposite. When I said short, you can do the opposite right now. And you can, again, but I'm saying you buy today. I'm saying if you get to 433, I'm just telling you how to trade it if you are bullish. You can go long here. You can go long a recovery back into the trading range, and then you go long again on a breakout of the downtrend line, and you'd go long again on a breakout above the trading range. Those are your three. Other than that, pullbacks to support. There's an infinite number of objective entries. So I'm just showing you the bullish breakouts, the levels that bulls want to see and bears don't. And that's a solid recovery and daily close back above 433. Then a solid breakout and daily close above the downtrend line, then a solid breakout and close above the trading range. And if and when any of those happen, again, I will give you my thoughts at the time. All right, we'll wrap it up here. Relatively short, 36 minutes, not too bad. I'll get it out to you and then answer any questions, or I'll keep hunting for new trade ideas, anything that I might have missed. This has been Randy Finney with Right Side of the Chart. Have a great day.